You sent the invoice 3 weeks ago. The work is done. The client's happy. And you're still sitting there refreshing your bank account like it's going to magically update because on paper you made money this month. In reality, you have $340 to your name and rent is due in 4 days. If you're a freelancer, contractor, or small business owner who's ever felt rich on your invoicing software and broke in real life, this video is for you. Not the 9-to-5er waiting on a paycheck. You, the person whose income shows up whenever a client decides to pay it. By the end of this video, you're going to understand exactly why that gap between invoiced and in the bank exists, and you're going to have a system that closes it. Not a budgeting hack. A real structural fix that gives you actual control over your cash flow, so you stop living invoice to invoice and start running your business like one. Here's the thing nobody tells you when you go freelance. Your income statement lies to you. You can have $8,000 in revenue this month and still bounce a payment, because revenue isn't cash. It's a promise, and promises don't pay your electric bill. This is the invoice-to-income gap, the time between doing the work and actually having the money, and it's the single biggest reason freelancers feel financially unstable even when business is objectively going well. Net, 30 terms. Net, 60 terms. The client who processes payments on the first. The one who ghosts your follow-up email for 2 weeks. Every one of those is a gap, and every gap is a period where you're floating your own business with your own personal cash, often without realizing it. And it compounds. If you've got 3 clients on staggered 30-day terms, you're not managing one gap. You're managing 3, overlapping at different points in the month. That's not bad luck. That's an unmanaged system. And unmanaged systems are exactly why so many freelancers feel like they're constantly one late payment away from panic, even while their yearly income looks great on paper. Let's fix this. For steps. Step 1. Map your actual payment timeline, not your invoice date. For every client, write down not when you invoice them, but when the money historically actually lands. Not the contract terms, the real average. Most freelancers budget off invoice dates, which is like planning a road trip off the speed limit instead of actual traffic. Your contract might say net 30. Your client might actually pay on day 42. That 12-day gap, multiplied across every client, is where the panic lives. Say you invoice $3,000 on the first with net 30 terms. If that client historically pays on day 45, you don't actually have that $3,000 until the 15th of the following month, not the 30th. Once you know that, you stop being blindsided. You start planning around reality instead of paperwork. Step 2. Build a minimum operating buffer, not a full emergency fund. Instead of the intimidating save 6 months of expenses advice, calculate your single largest possible payment gap from step 1, and save just enough to cover your essential business and personal expenses for that specific window. A full emergency fund feels impossible when your income is irregular. But you don't need 6 months of safety net to fix the invoice-to-income gap. You need enough to bridge your worst-case timing gap. That's a specific, achievable number, not a vague, scary one. If your biggest gap is 45 days and your essential expenses, rent, groceries, business software, insurance, run $2,800 a month, you need roughly $4,200 sitting in a buffer account. Not $17,000. $4,200. Suddenly this is a goal you can actually hit in a few months, not a fantasy you'll get to eventually. Step 3. Separate business cash from paid yourself cash with 2 accounts. Open a dedicated business checking account where all client payments land first. From there, pay yourself a consistent salary transfer into your personal account on a fixed schedule, weekly or bi-weekly, regardless of when individual invoices clear. This is the single biggest shift that ends feast or famine panic. Your personal spending stops being tied to the unpredictable timing of any one invoice. The business account absorbs the irregularity. Your personal account gets consistency. Say you bring in anywhere from $3,000 to $9,000 a month, depending on which clients pay when. Instead of spending based on whatever hit the account this week, you pay yourself a flat $4,000 a month salary from the business account, smoothed out from your trailing 3-month average. Feast months build the buffer. Famine months draw from it. You never feel either extreme. Step 4. Chase payment terms, not just payment amounts. When negotiating new contracts, treat payment terms as seriously as your rate. Push for deposits, milestone payments, or shorter terms. Net 15 instead of net 30. 50% upfront instead of 100% on completion. A $5,000 project paid over 45 days can hurt your cash flow more than a $4,000 project paid in 2 chunks over 2 weeks. Speed of cash matters as much as size of cash. This step attacks the gap at its source instead of just managing around it. Switching a single recurring client from net 30 on completion to 50% upfront, 50% on delivery, can cut your effective payment gap in half, turning a 45-day wait into something closer to 20 days on average, freeing up real cash months earlier over a year. Think about a freelance designer juggling 4 retainer clients, each paying on a different schedule. Before mapping her actual payment timelines, she felt like she was constantly firefighting, dipping into saving some weeks, flush the next, never sure which month it'd be. Once she built her buffer around her real worst-case gap and split into 2 accounts with a fixed pay-yourself schedule, the chaos didn't just feel better, it disappeared. Same clients, same income, completely different relationship with her money, because the system underneath it changed. So let's bring it together. The invoice-to-income gap isn't a personal failing. It's a structural reality of running a business with clients instead of a paycheck. You close it by knowing your real timelines, building a buffer size to your actual worst-case gap, separating business cash from personal pay, and negotiating terms that speed up when money actually reaches you. This is what it means to run your business like a business, not like a series of hopeful invoices. That's the shift from financial panic to financial control. If this helped reframe how you think about your cash flow, hit subscribe. This channel is entirely built for freelancers and small business owners navigating exactly this stuff. And before you go, drop a comment telling me your longest invoice-to-payment gap ever. I want to see how bad it gets out there. Next video, we're breaking down exactly how to calculate quarterly taxes when your income changes every single month. So subscribe and turn on notifications so you don't miss it.